Hello students, good evening to all of you. So students, now we are starting with our bullet revision series for the November 22 attempt. Vicky, hello. Bullet revision series students. This, मुझे बताओ students, you will want me to take right now in YouTube in Hindi or in English? Quickly let me know on this. Do you want me students bullet revision series to be done in Hindi or in English? Quickly! किसमें चाहिए स्टूडेंट्स, हिंदी में करूं या इंग्लिश में करूं बुलेट रिवीजन सीरीज? बताइए जल्दी से. सुधीर English. So okay students, in that particular case let me then do it in English as per the popular demand. So I will use English students so as to balance the audience and accordingly we will kick off with this one. विवेक, हिंदी और इंग्लिश दोनों में मैं इसको साथ में रखता हूं so that larger audience को cater कर पाऊं. Is that fine, Vivek? So students, bullet revision series. Okay Sudhir, not an issue. Bullet revision series students. In the series students, this is essentially your last day revision. It's a last day revision students for all of you. Now in the revision series, many students are asking, sir, in this bullet revision, are we only going to revise quickly the provisions or we are also going to do some practical questions also? And to that the answer is we are also going to do students some practical questions as well. This is what you people were waiting for it. In fact, I have selected some few of the important questions that as we proceed in our discussion in the bullet revision lectures, we will be doing this particular practicals as well as the integrated case study of the ICI so as to make the discussion and your participation very meaningful. I will first tell you the schedule of the session students so that every one of you are aware of the entire schedule. We are going to meet students for our bullet lecture at 7 o'clock in the evening. So 7 p.m. in the evening is a time that has been decided. Today I am meeting you. Then next would be on Monday, that is on 26th. 28th also students. 28th also. 28 timing students. I'm just going to prepone a bit. 28th. I'll give you the entire schedules and everything. Yes, Pankaj, first class. So 28th also students we are going to meet. And then directly students 2nd, 3rd, 4th, 5th, 6th and 7th. I think by 7th or 8th we are going to wind up our bullet revision series. So students, yeah, Pratik, it is in YouTube itself. This is available in the YouTube itself. So bullet revision students, as you all are waiting for it, we will quickly revise the provision and immediately we'll go through the relevant practical questions which I have selected for you for your November 22 examination. So majorly the real problem of the students is that they know the provision as such, but when it comes to the practical part of it, that is where they find it very difficult to apply the provision. So going by the students' popular request, I have accordingly designed students this entire bullet revision. So today's topic students and the topic for the next session would be the non-resident taxation. Today students, I was going to do with you 1 hour session. Monday session would be around for 3 hours. Monday session would be for 3 hours. Tuesday session would be for 3 hours because we have to complete the bullet revision in the limited point of time. So that is precisely the agenda for your bullet revision course. So let's start with this one. Non-resident taxation students, so far as your examination, Siddharth Yamini. Timing is 7 o'clock in the evening, Siddharth. Pratik, Pankaj, Regine, Sudhir, all get started. Vicky. Let's start students with this one. Timing for Monday, 7 o'clock in the evening also. It is 7 o'clock in the evening. Link of which I'll share it in my Telegram channel also. So all of you are aware of the link. So don't worry about that. Students, now in the non-resident taxation, let's look upon to this. We will go one by one, everything. First and foremost, students, in the your examination, and now students, knowing the fact that it is your last month of your preparation for your November 22 examination. The first item is the important item from examination point of view, but please try to revise. We will revise it smartly. The first one is the residential status. In the residential status, it is for individual and for the company. Majorly for the company, it is a foreign company. For foreign company students, the way I am going to do this thing, I am not going to take you to the provision first and then whatever I think that those things can be explained through practical questions only, I will directly go to the practicals and I will try to explain you from there, so that the provision also will get revised in a limited time. Through practical, the provision also will get revised. For individual students, इनडायरेक्ट टैक्स में एनआर टैक्सेशन दिख रहा है? नहीं, ये इनडायरेक्ट ट्रांसफर है भाई. कहां हूं अमिताभ? As far as the individual is concerned, students, ICI for residential status of an individual, they play it very smartly. They don't ask you an outright residential status question on the individual, but they target the question based on the residential status. In what, students? They target this residential status in various integrated case studies, and also they target this residential status question of individual in question relating to NRI, etc, etc. So I will try to now give you the examination approach as to how your mind should think whenever you are doing this particular provision in that context. So therefore, students, let's start with this one. Today I'll start with section 9, but residential status I'm keeping it for the next class, which is on Monday. Section 9 on the income which is deemed to bullet revision, I will just upload it in my Telegram channel. After the lecture today gets over, I'll just upload straight away in my Telegram channel so you can access the PDF file. Okay, so just hang in, students. First and foremost thing, students, section 9, what you have to revise. Two things you have to revise, students. One is the business connection, second is the indirect transfer. What is the, student, quickly, section 9, what you need to revise? 911, the first section 911, two things to be revised. One is the business connection, and second one, students, is the indirect transfer. In the business connection, students, no, Vicky, this has to be examination oriented because now it is only 1 month, so we cannot go detailed approach. So detailed approach, I'll skip it and I will focus only majorly on the from an examination point of view, students. Hindi में साजिब हम लोग special class में करेंगे. So 100% Hindi, if you all want, I'll do it in the special class. So special class link tomorrow would be the first class in Hindi in the special class. So those who want to do it in Hindi, I will do it in the special class medium. So that is one thing which I will do it. English, I'll do it in YouTube then, and Hindi I will do it in the special class. Link of the special class, you will get it tomorrow morning. The timings for tomorrow would be in the evening. In the evening, I'll just share the special class link tomorrow itself so that you all can attend it. Students, let's start with this one. Now, please pay attention, students. 911 on the day of the examination, students, quickly. Obviously, students, please, students, I want all of you, request to all of you to keep your notebook also along with you, because you need to take a noting of this. 911, the first section, two things, students. And what are the two things that has to be revised? One is that of the business connection and another is that of the indirect transfer. Indirect transfer. This time, students, I can expect one of the questions to be there in your examination. Either this could be business connection or indirect transfer in your exam. Why? Because last two attempts it was not been targeted. And in fact, I should tell you there is an amendment also, if you all are aware. I'll tell you about business connection. The business connection, students, the definition when you revise, it is divided into two parts. Two parts, students, quickly divided into two parts, includes and exclude. We will see what are there in include and exclude. I will quickly revise that for all of you. Exclusion, that is there, but inclusion, students, there are two things. What are the two things in the inclusion side of business connection? The presence of the agent in India who performs any one of the following three activity on behalf of the non-resident. Please repeat with me. The presence of the agent in India who perform on behalf of the non-resident any one of the following three activity will give rise to a business connection to the non-resident. The business connection to whom? To the non-resident. So agent, so the agent connect, so the agent, presence of the agent performing any one of the following three activities. Which are the three activities? We will refer and we will go through this. And the most important point, students, is what? The SEP. Can anyone tell me quickly what is the full form of SEP? You should be aware of it, students. SEP. So the SEP of a non-resident also will give rise to a business connection in India, and the full form of SEP is significant economic presence. Significant economic presence. So the economic presence should be significant. So what is the parameter of significant? We will see that, and that constitute a business connection to a non-resident. And if the non-resident has got a business connection because of the presence of his agent in India, or because of the significant economic presence, then the non-resident, in respect of the income arising out of such business connection, that income will be deemed to accrue rise in India. That income will be deemed to accrue rise in India. Devi, perfect. Devi Singh, absolutely. Significant economic presence. Thumbnail. Who has put this thumbnail? Indirect tax. Oh, I got it. I will tell the team to change the thumbnail, students. I'll tell the team, students. So many students got afraid from where in indirect tax NR taxation is there, isn't it? That's good also. At least many students in the thumbnail. Indeed, there is this thing. I'll make the correction. I'll tell the team to do the correction. So students, the agent, what kind of an activity, students? Are you all clear with this one? If you all are clear with this one, students, let's try to finish it off business connection in next 5 minutes quickly. So business connection, students, excludes. Students, business connection exclude. Deepak, what it exclude, students? It excludes, students, be very careful when you have to write your answer, students. You have to be very careful. The activity that they have mentioned in the exclusion part, that is the only activity. That is the only activity that the non-resident should be doing it in India. That is the only activity that the non-resident should be doing it in India. Only then we can say that the non-resident does not have business connection in India. So what is covered in the exclusion, or what is the only activity if the non-resident does in India which will not give rise to a business connection to such non-resident in India? So the activity are, students, let's have a look. Operations confined to the purchase. The word is confined. Confined to the purchase for the purpose of export. Purchase for the purpose of export. That is point number 1. Second one, students, business of running a news agency or publishing a newspaper. So what is the kind of the business? Business of running a news agency or publishing a newspaper if the activities are confined to collection of news for the transmission out of India. BBC. The third one, students, over here is that of operation which is confined to shooting of cinema films in India. Shooting of what? Cinema films in India. So that activity, if only that activity is performed by the non-resident in India, then it will not give rise to a business connection to that non-resident in India. However, students, there are further conditions also that has to be satisfied by the non-resident if they want to get the benefit of this exclusion. Namely, what is the further condition? These are the further conditions, students, that has to be taken into account. I'll just enlarge this particular portion. So what are the activity, students, over here? So let's have a look to this activity, students. What are the other conditions? If that particular producer of the movie who has come in India for shooting of the cinema films, if he is an individual, then he should not be a citizen of India. Point number 1. He should not be what? A citizen of India. Point number 1. But if that production house is a partnership firm, if the production house, students, is a partnership firm, then no partners in that particular firm should be a citizen of India. no partner of that particular partnership firm should be a citizen of India. That is point number 2. And the third one, students, in this particular context is, if that production house happens to be a company, then none of its shareholders should be a citizen or a resident in India. None of its shareholders should be a citizen or a resident of India. If these additional conditions are also satisfied, then the non-resident who is only carrying the activity of shooting of cinema films in India, that non-resident cannot be considered to have any business connection in India. That non-resident cannot be considered to have any business connection in India. Is that clear to all of you, students? And see the master stroke, the last exclusion, and the kind of question ICI have set in the examination in one of its attempt. Are you aware of that question, students? Many of you would be aware. You would have got an opportunity to refer that question of the ICI of the past year. See here, the exclusion, the last exclusion, students, that they have mentioned over here is where there is a foreign company who is engaged in the business of what, students? What is the nature of business? Mining of diamonds. Mining of diamonds, students. Diamonds are not manufactured. Through the mining process, the diamonds are extracted. Through the mining process, the diamonds are extracted, and that miner who does that activity of mining, that miner, not that miner small child. So that miner, students, what he does is that he then gives it for further sale, and then the trader comes in. The trader will come in, and then trader will take it forward. That is the kind of the industry. In the examination, what the ICI did was, instead of that person who is in the business of mining, they just substituted the word as a trader. So he is a trader of diamonds. And what that trader did, students, that activity of trader that you can see, his activity was to display the uncut diamond in the special zone notified by the central government. That was the activity of trader, to display those uncut diamond in the special zone notified by the central government. Every student got very excited. They thought that this is something that they have read it, and accordingly they said that this particular activity is covered in the exclusion to the definition of business connection, and therefore the non-resident does not have any business connection in India, and hence no income of the non-resident is deemed to accrue rise in India. And the answer, and the ICI smiled. ICI laid the trap, you fall in that trap, and they smiled. And the answer was wrong, because what is required for the purpose of this exclusion? It is not the person who is engaged in the activity of trading. It should be in the mining activity, students. This is what is required to get the benefit of this particular exclusion. Is that point clear to all of you? Then I can proceed to my next particular discussion, students. Quickly. Any doubt up till here? Only 5 seconds I am giving to all of you. Any doubt? Then I go to the include part of the definition of business connection. Include part of the definition of business connection, students. Perfect, students. So let's now go to the includes part. All Deepak? No doubt so far. So far so good, students. So in that case, we shall go to what the business connection includes. Sudhir, what the business connection includes. As I told you, in the include side, there is a two particular category, and one is that of the presence of the agent who performs on behalf of the non-resident any one of the following three activity that will give rise to business connection to that non-resident. So therefore, our concern has to be, what is the nature of the activity which the agent performs wholly on behalf of the non-resident? The activity therefore becomes the key for us. And in your examination, students, they will target only the first activity. That is what I can say to all of you. The first activity only they are going to target in the examination. And what is this activity that we are talking about it? What is that activity that we are talking about it, students? Here the agent plays a principal role. the agent is playing a principal role which leads to the conclusion of the contract on behalf of the non-resident. The agent plays a principal role on behalf of the non-resident which leads to the conclusion of the contract. So what is to be seen over here is whether that agent is he playing a principal role on behalf of the non-resident which leads to the conclusion of the contracts in India. And if he is playing a principal role, or if he is found to play a principal role on behalf of the non-resident, because of which it leads to the conclusion of the contract in India, then we can say that, students, that yes, it gives rise to a business connection in India. Be careful, students. Here, the actual conclusion of the contract by the agent in India has no relevance. Repeat with me. The actual conclusion of the contract by the agent has no relevance. What is required to be seen? What is required to be seen is whether what? Whether the agent is playing a principal role which leads to the conclusion of the contract. Even if he may not do the actual conclusion of the contract, then also we will say that the non-resident has got a business connection in India. Then also we will say that the non-resident has got a business connection in India. In the examination now, you will be getting a question, students, as per which you will be targeted with something like the agent is trying to inquire the prospective buyer. He is then trying to arrange the meeting, then discuss the terms and the condition. Then he freezes those terms and the condition. And thereafter, what he does? Thereafter, the terms so finalized is passed on to the non-resident, and based on that term which is finalized by the agent, the non-resident is actually concluding the contract with the buyers in India. So the actual conclusion was done by the non-resident, but the agent had been instrumental to ensure that the contract got finalized with that particular buyer. So therefore, if the agent is performing this particular activity or such activity on behalf of the non-resident, can we therefore say that the non-resident has got a business connection in India? Answer is yes, because the agent has played a principal role which leads to the conclusion of the contract, and hence in this particular case, students, the non-resident will be said to have a business connection in India. The non-resident will be said to have a business connection in India. Is that clear to all of you, students, now? That is point number 1, and this is where, students, you will have your questions in the examination. Second point, B and C, we will wrap up fast. You will not get the questions in the examination. On the agent part, there are 2 questions which I am expecting in the examination. One is this and another I will tell you shortly. But let's focus on what is going to be there in the examination, so your mind start rehearsing as to the possible questions that you're going to find in the discussion that we are having it in this context. The second particular point, students, is point number B. And what point number B says? The agent here in India, what he does, students? The agent here in India, he is maintaining. So please, one thing, you be careful. A, B and C, point A, B and C, they are mutually exclusive. They are not A and B and C. No, it is A or B or C. One of the any 3 activity, if the agent is performing on behalf of the non-resident in India, that will give rise to a business connection to the non-resident in India. Is that clear to all of you? So therefore, what is the activity which the agent will have to perform in point number B so that the non-resident gets the business connection in India? Point number B says that the agent is habitually maintaining the goods on behalf of the non-resident and delivers the goods as per the instruction of the non-resident. So here the agent is maintaining the goods of the non-resident and delivers the goods as per the instruction of the non-resident. So that's the only activity that the agent does. What is the only activity that the agent does? He is maintaining the stock of the goods on behalf of the non-resident and delivers the goods in India as per the instruction given by the non-resident. whether such activity only will that still give rise to a business connection in India to the non-resident? Answer is yes, it will give rise to the business connection to the non-resident, and that exactly is the point. And last point number C is self-explanatory, students. What point number C says? That the habitually that agent is securing the orders on behalf of the non-resident. Although I must say point A and C are more or less overlapping to each other, but you don't worry, just focus on point A, because that point number A is what going to be there in your examination. Now the next question which I can foresee in your examination, the next question, students, which I can foresee in your examination is this particular point. On the agent part which give rise to the business connection, there is one exception. In one particular case, the presence of the agent may not give rise to any business connection in India. In one particular case, students, the presence of agent will not give rise to any business connection in India. So you may ask, sir, what is that particular case? So that particular case is where the agent in his independent capacity, buying and selling the goods of the non-resident, not on behalf of the non-resident, but in his independent capacity, he buys and sells the goods of the non-resident. I'll give you an example. One example just to clarify this very important concept. So supposingly there is one person in India who has his own shop. A person in India, he has got his own shop. And students, here in that shop, he has got 10 particular non-resident whose goods he keeps in his shop. 10 non-resident goods he is keeping in his shop. Now the buyer comes to his shop and then he just showcase what are the goods that is available with him, and let the buyer decide which goods the buyer wants to purchase from his shop. Let the buyer decide. So the agent is not pushing the goods of any of the non-resident. The agent is not pushing the goods of any of the non-resident. Let the buyer decide which goods that he wants to purchase, and I am going to give that goods to the agent, to the buyer. And if that is the nature of the activity, of the agent in India, then definitely we cannot say that this agent is wholly or mainly acting on behalf of the non-resident. In fact, he is acting in his independent status. As far as all the non-resident are concerned, he is maintaining an arm's length distance with all the non-resident, and therefore he is having an independent status, and because of that, the non-resident cannot be said to have any business connection in India. And if he cannot be said to have any business connection in India, accordingly, what is the conclusion, students? The conclusion over here is that there will not be any business connection of the non-resident because of such agent in India. Is that clear to all of you, students? All of you are clear here in this particular case? Any doubt or any point you want me to repeat quickly, you have to let me know, students, because once we move out, we are done, and they are done once and for all. Can we proceed further, students, with your permission? With the permission of the chair, students. Quickly! Take fast. At Sudhir, Devi, Deepak, Kevin, all clear? Ashwini? So let's proceed further then, students, in that scenario, if you all are clear. So let's proceed that discussion further, students, then. One last point, students, which I just want to tell you before I go to my next particular point of business connection, which is again a very important point, which is significant economic presence. But before I touch that, last point. Students, in the examination, be careful. If once it is established, please be careful, students. Once it is established that the non-resident has got a business connection in India, then in that particular case, only the profit which is attributable the profit which is attributable to such business connection only will be considered as an income which is deemed to accrue or rise in India. Once it is established that the non-resident has got a business connection in India, then what? Then the profit which is attributable to such business connection in India only will be considered as an income which is deemed to accrue or rise in India. This is known as profit attribution. This is known as the profit attribution. Why I am making so much of emphasis? Because in one of the MTP, I have seen last attempt or last to last attempt one theory question on profit attribution. And the students could not understand what is this profit attribution. They have not heard of it. This is what these people have targeted in the examination. So profit attribution is relevant in the context of business connection. Profit attribution is relevant from the perspective of business connection, Harshal. So whenever there is a business connection, then only so much of the profit of the non-resident, which is attributable to such business connection in India, that profit only would be considered as an income which is deemed to accrue or rise in India. That profit only will be considered as an income which is deemed to accrue or rise in India. This is what you need to write in your theory in your examination, because all of you are aware in the international taxation for 30 marks, some 5 marks of the questions are of theory, and this was one of the questions in your MTP. So therefore, students, with that, let me proceed, students, now to my next discussion of business connection, and that discussion, students, happens to be on the significant economic presence. Before I go to that, just give me a minute time to explain why this we are reading. What is the logic behind reading the concept of significant economic presence? I'll take only 1 minute time to just explain the why of the significant economic presence. Students, please understand the business connection definition that we are having. The business connection definition, students, that we are having. This definition of business connection is in inclusive manner. All of you agree with this one? So what actually it means has not been told to us so far as the act is concerned. What actually it means, we are not told. What do you mean by the term business connection? So that is absent, isn't it? Now, in this particular case, be careful, students. In this particular case, as I told you, that what business connection actually means, nobody is telling anything about it. So what does it mean, students? In a simple particular word, business connection actually means that the non-resident has physical presence in India. Physical presence in India, or a place of business in India through which he is doing his business in India. That is the normal meaning of the term business connection. The non-resident is having a physical presence or a place of business in India through which the non-resident is doing what? Doing his business in India. This is what we understand in the normal sense, the concept of business connection, or may I say the concept of permanent establishment. The concept of business connection or the concept of permanent establishment, this is the ordinary meaning of it. Yes, Devi, perfect. That is the real meaning of it. Okay, now you all know, with the e-commerce transaction, with all the e-commerce environment that we all are in, e-commerce, e-payment, everything e. So e-commerce, e-payment, now the physical presence concept has lost its relevance. Now without a physical presence, I can do the economic activity in India. Without a physical presence, I can do the economic activity in India and I can earn fortune. We all are aware how now Amazon now has got a physical presence, but otherwise also they need not necessarily need to have a physical presence in India so as to do their economic activity. So therefore, the meaning of the business connection, which requires some physical presence in India, that meaning which we understand as business connection, that meaning has lost its relevance in today's time when the e-commerce transaction is dominant. when the e-commerce transaction is dominant. So there are many non-resident who, without having any physical presence, are having significant economic presence. There are non-resident who, without having any physical presence, they have significant economic presence, and therefore to capture those non-resident within the umbrella of the Income Tax Act, to capture those non-resident who does not have any physical presence but they have in India significant economic presence, to capture those non-resident within the umbrella of the Income Tax Act, the definition of business connection has been expanded to include the significant economic presence as well. So the business connection will also include a non-resident having a significant economic presence in India. So without having a physical presence, if a non-resident is having a significant economic presence, without having a physical presence, if the non-resident is having a significant economic presence, will that still give rise to a business connection in India? Will that still give rise to a business connection in India? And the answer is yes. And the answer is yes. Now, can any students in next 30 seconds, can they tell me the criteria when there would be a significant economic presence? The criteria when there would be a significant economic presence. Quickly, students. 30 seconds time I am just giving to all of you to answer me this. And this is one of the expected question in your examination. Now, be careful. You should not be found sleeping that we don't know. At least you can give a try. That is true, Ashwini. Can you tell me the required number of users? Pushti? Indeed. Indeed, students. I think the students have already contributed. Pushti, Ashwini has taken the lead in the situation. The girls have taken the lead. Boys. The boys played well yesterday, isn't it? Yesterday evening, the boys played well. But what happened to the boys today evening? So, students, indeed, in this context, the significant economic presence, students. Perfect. There are two criteria, and if that non-resident who does not have any physical presence in India, if one of the two they satisfy, what is that? They are sale, Sudhir, Devi, the sale of goods to whom? To buyer in India. The sale of goods to a buyer in India of how much? Of more than rupees 2 crores. Please don't use the word resident in India. We don't know he is a resident or non-resident. We don't know. What is only criteria? When you have to write, please write it properly in the examination. You will write if the non-resident is found to be selling the goods of more than rupees 2 crores in that previous year. In the previous year, students. In that previous year, then this will give rise to a business connection in India. That is one criteria. And second one is based on the number of users. Based on number of users of the application in India. Based on the number of users of the application in India. If the number of user in application in India, students, is how much? Greater than or equal to 3 lakhs user. Now you can say, sir, what do you mean by this? Very quickly, I'll let you know. Say, for example, mobile app. A non-resident has many of the mobile app. Chinese mobile app is there. Many of the app is of the Chinese. Now, if they find and they don't have any physical presence in India, so therefore, if supposing they tell you to download the app and many people then download the app. So if the number of users who may have downloaded the app in India, if that touches 3 lakhs or it goes above 3 lakhs, then that non-resident who may not have any physical presence in India, can we say that they have got a significant economic presence in India? Answer is yes. So what this significant economic presence, will it give rise to a business connection in India? And the answer is yes. And hence, the profit which is attributable to such business connection in India, will that be charged to tax? Again, the answer is yes. I hope that all of you are now clear. Business connection is complete. Can I go to indirect transfer quickly with your permission? Quickly, any point you want me to explain? I'm done with this business connection, students. Any further point, students, that you want me to do? Now, there is one question which I want you to refer it. One question I have drafted for your examination purpose. Now, in this question, students, I have captured from one of the materials in this context of CS examination, very recent examination of CS final. I find it very, very important for your examination. So what is the nature of question in that CS final examination very recently conducted? So I say I can pick up from that and maybe give you this particular question. Simple, students. The cinema film, shooting of the cinema film is taking place in India. The shooting of the cinema film, students, is taking place in India. Now you tell me, if the activity is confined only to shooting of the cinema films in India, if the activity is confined only to shooting of cinema films in India, whether then that will give rise to any business connection in India? Just now we have said answer is no. But is there any condition further to be fulfilled? Yes. What is that condition? If he is an individual, then he should not be a citizen of India. If there is a partnership firm who is the one who is producing this movie and for the purpose of which they are shooting the films in India, then none of its partner should be either a citizen or a resident of India. And if that particular company who is producing that movie and for which they are coming in India for shooting of their films, if that company is the foreign company, then none of its shareholder should be a citizen or a resident of India. This is a question which I have put across. You definitely can refer it quickly. I have already explained to you the question, and that is how I am going to discuss with you the question which I have put up in this particular module, because it's a bullet revision. Everything has to go in express fast mode. Is that clear, students? Is the speed fine, students? Please tell me, because it's your particular comfort which is critical. Is the speed also fine? Quickly! And I want everyone to answer this. Not one or two. This is not your examination question, students. Sudhir, Deepak, Ashwini, Nasmuddin. Is the speed fine? Perfect, students. So I think the majority of the students are okay with the speed. Devi, Kevin. So let's, in fact, students, maintain that and now go to the indirect transfer. Students, very critically, directly instead of Ashwini, instead of doing this particular provisions and all, just think of it what they are going to target in the examination. Rather than giving you the provision part, I'll explain the provision, but I told you already some of the provision I will directly take you to the case study, explain the provision, and we will move on. This is one of the things which is there. Nasimuddin, today is only for an hour. Monday it is 3 hours. Again, students who have just joined in, for their benefit, I'll just let you know. Today we are having the session for an hour. Monday, that is on 27th, we are having the session for 3 hours. Tuesday, 2 hours. The total, then on directly we are going to meet on 2nd, 3rd, 4th, 5th, 6th, 7th and 8th. 8th is the last, 7 o'clock. So every day, generally the span would be for around 3 hours or so. And that is precisely what we are going to do justice to this particular bullet revision series that I'm having for all of you. Fine, students. Okay. So 8th, we will have to wrap it up. Obviously, I cannot cover in my bullet revision all the topics, but I will touch upon all the important topics for your examination in my way, the way I'm doing it right now, with the practicals and everything which has been placed in this particular module. And that is how you will have all the important and difficult topics covered in this bullet revision series, which I'm having it with for all of you. Is that clear to all of you now, students? Now today And on Monday, it is only NR, but we will proceed further with other topics also. Bullet revision is not only for NR, it is for paper number 7. This is paper number 7, by the way. This is not the revision of 6C. So somebody may start thinking, sir, is it 6C that we are revising? No, it is paper 7. Now students, in your examination, just be very careful. Indirect transfer question, you will find this kind of a questions in the examination, students. All of you, just pay attention to the kind of the questions which will be there. Here they will talk about India. There is a company in India that will be given to you. There is a company in India, students, that they will give it to you. Say for example, for simplicity purpose, RIL. Okay, and thereafter, students, they will also tell you that in between there is another company, primarily say that company is in Singapore, and finally, students, the ultimate one, the ultimate player is the one who is residing, say, in a third country jurisdiction. So in your examination, what I feel, 3 country level they are going to ask. Vodafone was 14 country case study which was there. They will not ask you that question. In indirect transfer, for your CA final examination, they will target the 3 layer, and the first layer happens to be in India, which is the immediate business or the immediate company. The second layer, they will definitely will put up 1 level above, and this is, say I give you the example of Singapore, and the main player would be in the third jurisdiction, and in my example it is US. So what is the game of the main player, students? In this case, here this is X INC dot. This is a non-resident. This is the notorious player, and what this person does, he has invested, he has floated another company in Singapore. He has floated another company in Singapore, students, and by virtue of floating another company in Singapore, students, he has subscribed to almost all the share capital of that company. He has subscribed to almost all the share capital of that particular company, and therefore this particular person, the company, gets share capital and money because of the subscription of the share capital. And thereafter what they do, students, what they do, they make the investment. They now go for the investment. This is what this particular Singapore based company is doing. They are now going with that investment. So say for example, they are investing, say, 80% of the money that they have in acquiring the shares of that Indian company. In acquiring what, students? In acquiring the shares of the Indian company. Say 80% they are using it, the money, to acquire the shares of the Indian company, and the balance 20%, students, say in any other foreign asset that they have made the investment, in any other FA is foreign asset that they have made the investment. Now what happens? They will also tell you that look, they have invested in the Indian company, the Indian company is doing very good. Something of that data would be there in the question. So say for example, the growth rate of the Indian company is, say, at 40%. The growth rate of Indian company is at 40%. Now with the growth rate of Indian company at 40%, what will happen? It will have a very ripple effects. It will have, students, a ripple effect. What is ripple effect? This particular growth rate of this Indian company will have an immediate influence on its share price. So the fair market value of the shares of RIL will go up. The fair market value of the shares of the RIL will go up. And if the fair market value of the shares of RIL will go up, what will have the impact on ZPLC? ZPLC's own investment fair market value. ZPLC's own investment fair market value will also go up. So the book value could be anything, but the fair market value of its investment, students, will go up, which means the fair market value of the assets, the fair market value of the assets of the ZPLC has gone up. The fair market value of the assets of ZPLC has gone up. So what is the impact if the fair market value of the assets of ZPLC, which is a foreign company, if that goes up? If that goes up, what is the impact? The impact would be on its own share price. The impact would be on its own share price. So if the fair market value of my asset goes up, then it will have the impact on my own share price. And what is the impact? The fair market value of my own shares will also go up. The fair market value of my own share will also go up. So the fair market value of my own shares will also go up. and once the fair market value of the shares of this Z PLC goes up, do you know what happens? Now X Inc dot, the main player, the X Inc dot transfers. What it transfers, students? It transfers the shares of, students, the shares of whom? Shares of Z PLC to another foreign company, say for example YNC dot. And where the transfer has taken place? In USA. Now the question is, there is a huge capital gains. So there is a capital gains arising on such transfer. Question in the examination would be the capital gains arising on transfer of what? Transfer of shares of Z PLC. Will it be taxable in India? Will it be taxable in India, students? That becomes the ultimate question in the examination. Whether the capital gains arising on transfer of shares of Z PLC, will it be taxable in India? That becomes the ultimate question. Now everyone knows what is the answer, but the problem is that you don't know how to write the answer. So please take one particular thing from me. Here, students, just write only one provision sensibly. If it comes in the examination, because if you cannot write that provision sensibly, whatever is your knowledge, students, it is not going to fetch you any marks. Only one provision sensibly you have to write. And what is that provision, students? That provision, for your benefit, students, I'll just try to split it in small particular pointers for your provision. So this is the provision, students, that you need to write it very carefully, and that is explanation number 5 to section 911. Because if you cannot write this provision, students, for indirect transfer, irrespective of your knowledge, irrespective of yes no answer, students, you will not get anything. Nowadays there are a lot of talks which is going on about the ICI doing a wrong checking, and I also agree to this proposition because many of my past students have been victim of it. But at the same time, we should also admit that there is inherent limitation of our part to evolve to that particular writing proper provisions. And some of the questions, they do require the students to write proper provision, students. This is one among them. So students, please be careful on this particular part. In this particular context, students, here explanation number 5 to section 911. So please, you can just take a note of it and please reproduce this way, where the shares of the foreign company, which foreign company? From my example, I'll just write Z PLC, where the shares of the foreign company derives its own value substantially from any asset in India. In my example, it was, students, RIL. Then the shares of such foreign company, which foreign company? Z PLC. Then the shares of such foreign company, which foreign company? Z PLC, is what? Deemed to be situated in India. Students. Siddharth, let it be Siddharth. It's useless, in fact, even to comment. Don't, in fact, even think of commenting it. Let they pursue their agenda. So in this context, students, where the shares of the foreign company derive its own value substantially from any assets in India, which is RIL, then the shares of such foreign company is deemed to be situated in India. So what you have done is that you have shifted the location of the shares of Z PLC from Singapore to India, and that location shift will happen only if that location shift, in my example, from Singapore to India, will happen only if ZPLC derive its own value substantially from the Indian asset. And if that is the case, then as per explanation number 5, the shares of that ZPLC will be deemed to be situated in India. And if it is deemed to be situated in India, then we can say that XINC.USA, what you have transferred is an asset which is situated in India, which is the shares of ZPLC. And because of the transfer of the asset situated in India, whatever is the capital gains which you have earned on such transfer, that capital gains also will be deemed to accrue or rise in India. That capital gains also will be deemed to accrue or rise in India. Is that clear to all of you? That capital gains also will be deemed to accrue or rise in India, students. I hope that all of you are clear. So ultimately, it will boil down to only one thing. In your indirect transfer, now they can give you numericals. Now there are two types of question which you can expect in the answer examination. One type of question is without they asking you the numbers, because to fulfill the substantial test we require numericals. To fulfill, students, yes Anis, you are correct in your interpretation. To fulfill the substantial test you require numbers, but I have seen that ICI is in some attempt, they don't want to test the numericals, so they try to only give this kind of a case study, and on that basis they just want you to conclude. So if they give it to you this information that this foreign company derive its own value substantially from an Indian asset, then in that particular case, students, you are going to conclude that the shares of that foreign company is situated in India. And if that shares of the foreign company is situated in India, then whosoever transfers the shares of that particular foreign company, the capital gains arising on that transfer, is deemed to accrue or rise in India. And accordingly it will be charged to tax. Minority, Siddharth, I will touch upon on that at the end. Minority part which you are talking about it, minority interest that you are talking about it, I'll touch upon at the end. But I hope that up till now all of you are clear. So this is one of the kind of a questions that they will ask you in the examination, but to answer that question also you require to write this particular provision clearly. Is that clear to all of you? Now we go to the numericals part. And what is the numerical? Substantial test. The substantial test. So what constitutes substantial test? Now there is one homework that I'm going to give it to you, students. Substantial test. Substantial test, students, if the question in your examination further gives you numerical, then in that case it means that they want you to also analyze based on the numericals that whether that foreign company, which is ZPLC in my example, whether they derive their value substantially from the Indian asset. This is what they will try to target through numericals. So substantial test, students, in this case, substantial test, primarily there are two things. How to revise in the examination? There are two things. When to test in the substantial condition, students, when to test, that is point number one. And the second one, students, is how to test. How to test, that is the second point. Now when to test talks about the relevant date. What is the relevant date in which you are going to target this substantial condition? On which date you are going to look the substantial conditions? So that is the relevant date. There are two dates which you need to select. Students, which you need to select. One is the date of transfer and one is the last date of the accounting period preceding the date of transfer. The last date of the accounting period preceding the date of transfer. So between these two dates, you have to decide which date you need to satisfy the substantial condition. Now how to decide? That is your homework. How to decide, students? That is your homework. I will directly go to this particular condition, and that condition is how do you test this substantial condition? How to test this substantial condition, and the criteria is that on the relevant date, on the relevant date. So whichever is relevant date as per point number 1, on the relevant date as per point 1, students, both the two conditions should be satisfied. Both the two conditions should be satisfied. And which is that two condition? Condition number 1, students. Both the two conditions should be satisfied. And which are those two conditions, students? The first condition happens to be that the fair market value of the Indian asset, students, should be more than rupees 10 crore. More than, students, not more than or equal to. It is very clear, it is more than. It is more than, students. And the second particular point, students. And the second particular point, students, is what? The second condition is the fair market value. This is Indian asset, students. This is Indian asset. And the fair market value of the Indian asset, students. Fair market value of the Indian asset is greater than or equal to. Here it is greater than or equal to. Please be careful what you write. Here it is greater than or equal to 50% of the fair market value, what I have written, of the Indian asset. Of the Indian asset is greater than or equal to 50% of the total fair market value of the foreign income. Total fair market value of all the assets. Total fair market value of all the assets. Of all the assets of the foreign company. Which foreign company? ZPLC. Which foreign company? ZPLC. Neelanjan, good evening. Therefore, these two conditions should be satisfied. First condition, again I am telling to all of you. Fair market value of the Indian asset should be more than rupees 10 crores. That is the first condition. And the second condition happens to be the fair market value of the Indian asset should be at least 50% of the total fair market value of all the assets of that particular foreign company. So first condition is an absolute value condition. First one condition, students, is the absolute value condition, wherein the Indian investment fair market value, Indian investment held by ZPLC, that Indian investment fair market value is more than rupees 10 crores. And the second condition is a relative condition. Relative means the fair market value of the investment in that Indian asset should be at least 50% of the total fair market value of all the assets of that particular foreign company, which is ZPLC in my example. Is that clear to all of you? And this is what you need to test. Now, if they want to escalate further in your examination, if they want to escalate further, then this would be the ultimate question. I don't anticipate this type of question, but you cannot be sure about the ICI. They can also ask you how to determine the fair market value. I don't foresee this type of question, but you never know with ICI. Students, here the fair market value is the whatever is the value of the asset. Whatever is the value of the asset. Value of the asset, students, FMV is the value of the asset in this context. The fair market value is the value of the asset, the value of the asset. And please add what? Any corresponding liability on that asset. Corresponding liability on that asset. This is how the fair market value has to be determined whenever you have to target the indirect transfer question. Any corresponding liability, if they have given to you in the question, then the same needs to be targeted. This is what you have to be careful. I'm repeating, they may not go to that extent, but please be careful, because the fair market value in the fair market calculation in this particular section is very different from all the fair market value that you have learned in the income tax law. Here the FMV value is a bit different, and numericals I'm coming on that. Just first let the concept gets clear. So this is how the fair market value has to be targeted. If you all are clear with this one, students, immediately we'll take one numerical question. And this is a numerical question, students, which we are going to take it across. This is the numerical question, students. Students, by the way, I'm just deleting this. This is just misplacement of this particular paragraph. But let's start with the numerical question. Just I'm deleting this part because this got inserted here. It should not have been inserted here, but still. Let's start with your permission, students. Quickly. RIL is an Indian company, engages in multifaceted business activities. Multifaceted means various business activities. So RIL is an Indian company, students, which is engaged in multifaceted business activities. Barbara Inc. a US investment giant. Barbara Inc. a US investment giant. Now what does Barbara Inc. has to do over here? So Barbara Inc. a US investment giant, students. What they are doing in this case, they want students, they want to get 20% stake in the Indian company. So the US company wants to get 20% stake in the Indian company. Now what they have done, students, over here, please be careful. Considering what? Considering a favorable treaty position between India and Mauritius, the US giant floated a company in Mauritius by acquiring its shares. On which date? On 1st of Jan 2020. On 1st Jan 2020. So the US giant floated a company in Mauritius by acquiring its shares on 1st Jan 2020 for rupees 10 crores. For rupees 10 crores, students. The Mauritius company in turn, now you have to read from here, students. The Mauritius company in turn acquired shares of RIL on 1st of March 2021. So quite a long gap, but the Mauritius company has acquired the shares of the Indian company on 1st of March 2021. So please be careful. When the US company US company has floated the Mauritius company, they have floated the Mauritius company on 1st of Jan 2020. And second, once the Mauritius company was floated, when the Mauritius company has acquired the shares of the Indian company, they have acquired the shares of the Indian company on 1st of March 2021. After that, students, the accounting period of Mauritius company ends on 31st of March. Why accounting period has been mentioned to you? Because I just told you the substantial condition that has to be tested requires two things. One is when the substantial condition has to be tested, and second is how the substantial condition has to be tested. So when and how, these are the two things, students, that we need to consider. So here the accounting period of the Mauritius company ends on 31st of December. As on 31st December 2021, its book value of total asset is 25 crores. I'll explain you that concept of relevant date through this example only. As on 31st December 2021, its book value of total asset was rupees 25 crores. Next paragraph, on 31st of March 2022, Barbara Inc. transferred the shares of the Mauritius company to another investor in US. So now they are transferring the shares of the Mauritius company to another investor where? In US. And what is the selling price? 50 crores. So now the question of capital gains will come in the hands of that US investor, which is Barbara Inc. Isn't it? The book value after reduction of liability. For book value, we don't get ourselves bothered about the liability reduction, but for fair market value, after reduction of liabilities, this is what I told you just now. When you have to determine the fair market value, then for the purpose of indirect transfer question, then the fair market value have to be added with, any corresponding liability which has been reduced. So it is not the net asset approach. That has to be followed for determining the fair market value in the question relating to indirect transfer. It is the gross approach that has to be followed to determine the fair market value in the indirect transfer question. So therefore, the fair market value after reduction of the liability as on 31st March 2022 is as below. So book value has been given of Mauritius company, fair market value has been given, and liability is 0. For Indian company RIL, the book value is 110, the fair market value is 80, and the liability is 20 crores. So if I have to take the fair market value of the Indian company for the purpose of the calculation of questions involving indirect transfer, then my fair market value, students, will become how much? 200 crores. then my fair market value, students, will become how much? 200 crores. Is that clear to all of you? The fair market value, students, over here will become, students, how much? 200 crores. Do you all agree to this one? Now you tell me, how much of the stake, students, how much of the stake in that 200 crores of the fair market value does Barbara Inc. Dot has it through the Mauritius company? How much of the stake in that Indian company that Barbara Inc. Dot has through the Mauritius company? The stake is 20%, students. The stake is 20%. Just at the start of the question itself, they wanted to get the stake of 20%. So if the stake is 20%, students, in this case, 20% of this would become how much? 40 crores. 20% of this would become how much? 40 crores. The total fair market value of the investment in the Indian company, the total fair market value of the investment in the Indian company is how much? 40 crores. Now, students, this fair market value which we have got of 40 crores, can you tell me on which date we are talking about it? On which date we are calculating this? We are calculating this on 31st of March. We are calculating on 31st of March. What is 31st of March? 31st of March in our question. 31st of March in our question is the date of transfer. 31st of March in our question, students, is the date of transfer. Do you all agree to this one? 31st of March in our question, students, is the date of transfer. I told you first to decide which date has to be selected. Is it date of transfer to be considered for the purpose of calculation, or it is the last date of the accounting period preceding the date of transfer that has to be considered for the purpose of calculation? What has to be considered for the purpose of the calculation? So students, the criteria is this. What is the criteria? The foreign company whose shares is transferred. The foreign company whose shares is transferred. In our example, it is Mauritius company. Check the book value, the total book value. The book value. Check the book value of all the assets. Check the book value of all the assets on the two dates. On these two dates. Which two dates? The two dates are the date of transfer of its shares by the US non-resident, and the second date is the last date of the accounting period preceding the date of transfer. So check the book value of all the asset of this foreign company on these two dates. And if I have to check the book value of all the asset of the foreign company on this two dates, students, then which is the date which we have got it in this context? So the dates are, date of transfer is 31st of March. And what is the total book value of the asset? On the date of transfer, it is 30 crores. The total book value of the asset is 30 crores. Okay. And what is the last date of the accounting period? 31st December. 31st December, last date of the accounting period preceding the date of transfer. As on the last date of the accounting period preceding the date of transfer, the total book value happens to be 25 crores. 25 crores, students. Now, please tell me, is there increase? Is there the increase in the total book value of the asset on these two dates? Which date? First is the last date of the accounting period preceding the date of transfer, where the total book value of all the asset of that foreign company is 25 crores. That is point number one. And the second date is the date of transfer, which is 31st of March. And the total book value of all the asset of that foreign company, the Mauritius company, is 30 crores. So now you tell me, between these two dates, students, is there increase by more than 15%? Answer is yes. 5 crores divided by 25 crores. 5 crores divided by 25 crores. You can see that the jump is more than 15%. And because the jump is more than 15%, you will go with the data relevant on the date of transfer. So your relevant date now is the date of transfer. And therefore, if the relevant date is the date of transfer, then on the date of transfer, that is 31st March 2022, the fair market value of the investment in the Indian asset should be more than 10 crores. The fair market value of the investment in the Indian asset should be more than 10 crores. And on the same date of transfer, which is 31st March 2022, the fair market value of the Indian investment should be at least 50% of the total fair market value of all the asset of the Mauritius company, the foreign company. So we have to see whether these two conditions are satisfied or not. What is the fair market value of the investment? What is the fair market value of the investment of the Indian asset on the date of transfer? So the fair market value of the investment in the Indian asset on the date of transfer is 40 crores. That is 40 crores, students. So is it more than 10 crores? Yes. What about the second condition? Is the fair market value of the Indian investment is at least 50% of the total fair market value of all the asset of the foreign company? Is it at least 50%? Just have a look. Is it at least 50% or not? What is the total fair market value, students? What is the total fair market value of all the asset of that Mauritius company as on the date of transfer? It is fair market value of all the asset of the Mauritius company as on the date of transfer is 50 crores. Out of which, how much is the fair market? How much is the contribution of the fair market value of the Indian asset? How much is the contribution of the fair market value of the Indian asset? 40 crores. So is it greater than or more than 50% of the total fair market value? Yes. So can we say both the substantial condition on the relevant date, which is the date of transfer, has it been satisfied? Both the substantial condition as on the relevant date, has it been satisfied? Answer is yes. If that is the case, then can we conclude that the Mauritius company derive its own value substantially from the Indian asset? Yes. And if that is the case, can we finally say that the shares of that Mauritius company is deemed to be situated in India? Answer is yes. And if the shares of the Mauritius company is deemed to be situated in India, then Barbara Inc.USA, what it has transferred? Barbara Inc.USA has transferred a capital asset which is deemed to be situated in India. And because of that, the capital gains is deemed to accrue or rise in India. And if the capital gain is deemed to accrue or rise in India, so the calculation of capital gain has to be done by Barbara Inc.USA. Calculation of capital gain has to be done by Barbara Inc.USA. And do you want me to tell you, or do you want me to show you how the calculation of capital gains would be done by this non-resident who has transferred a shares which is deemed to be situated in India? Do you want me to show you how the calculation of capital gain, students, will be done in this particular case? Quickly! Do you want it or not? As to how the calculation of the capital gain, students, will be undertaken in this case. And many of you will be surprised to know about it. The calculation of capital gains now will be required. The calculation of capital gain, students, will now be required to be done by the non-resident. And who is that non-resident? Barbara Inc. Because that Barbara Inc. has transferred the shares which is of Mauritius company, but which is deemed to be situated in India. And therefore, the US company will have to calculate capital gains. What is the selling price, by the way, students? We already know the selling price of the shares, and the selling price of the share, students, in this particular context is known to us. How much is that? 50 crores. 50 crores. What is the date of transfer? 31st March 2022. When the shares was acquired of the Mauritius company, which they have transferred, when the shares was acquired of the Mauritius company, which they have transferred, they have acquired on 1st of Jan 2020. Tell me one thing, the shares family is the capital asset. Family. Now the shares is a capital asset. We have to distinguish whether it is long term or short term. Now that Mauritius company share which they have transferred, is it listed in India? Will it be considered as a listed share or unlisted share? will it be considered as a listed share or unlisted share? So far as India is concerned, it is unlisted. Unlisted. And if it is unlisted, then unlisted shares, what should be the period of holding so that it becomes long term? More than 24 months. More than 24 months. So is the period of holding from 1st Jan 2020 to 31st March 2022, is the period of holding more than 24 months? Answer is yes. So is it a long-term capital asset? Again, the answer is yes. Now, this provision, students, I think you may not be aware of it. But let me in fact give you this provision, students, and if possible, very small provision, but do take a note of it. If a non-resident students transfer long-term capital asset, which is unlisted security, if this combination is there, long-term capital asset which is unlisted security, if this combination is there, then the long-term capital gains will be calculated. The long-term capital gains will be calculated primarily without the indexation benefit. I'll come to that, Ashwini. Without indexation benefit. Without indexation benefit. And the tax rate would be at 10%. The tax rate would be 10%. This particular combination you just keep in mind. This combination you just keep in mind. What is the combination? Non-resident transferring long-term capital asset. What is a long-term capital asset? The unlisted securities. Then the long-term capital gains will be calculated without providing the indexation benefit. And if that is the case, what is the tax rate? It is 10%. By the way, this is not an optional provision. This is a mandatory provision. This is a mandatory provision. Now, Ashwini is asking herein how the Mauritius company shares, which is the long-term capital asset transferred by the US company, how it is unlisted. So obviously when you talk about listed, unlisted, whenever you talk about listed, unlisted, that has to be from the perspective of India. In India, Mauritius company shares you have transferred. In India, for India, you tell me, students, for India, Mauritius company shares, is it listed or unlisted? You have transferred Mauritius company shares. For that only we are calculating the capital gains. So the capital asset is the shares of the Mauritius company. So the shares of the Mauritius company which you have transferred, so far as India is concerned, is it listed or unlisted? And the answer is it is unlisted. From Indian perspective, it is unlisted. And because it is unlisted, students, because it is unlisted, therefore the long-term capital gains will be computed without providing the benefit of indexation, and the rate would be 10%. I hope that all of you are clear with this one now. Ashwini, are you clear with this particular point now? Now with that, students, this is a solution herein which I want all of you to go through it once in this particular case. So this solution, students, I am now putting it for you in the PDF file. I have discussed all the crux of it. So therefore, students, this is the point. Now last point, students, about the minority interest. I think Siddharth have asked this particular question on minority interest. So we conclude. So indirect transfer is over. One question they can also ask you, that if supposingly the transferor, who is the US company in my example, because they are the one who have transferred the shares of the Mauritius company. So if the transferor, students, in this particular case, if he is holding only 5% or not more than 5% of voting power in the Indian company, if the transferor, which is the Indian company, if they are, transferor, who's a transferor? US company. If they are holding in that Mauritius company a voting power which is not more than 5%. If they are holding in that Mauritius company a voting power which is not more than 5%, therefore the question to all of you is, whether there would be any income, which will be deemed to accrue or rise in India in this case. Whether there will be any income which will be deemed to accrue or rise in India in this case, to that the answer is no. So even if the answer is no, students, even if the Mauritius company derive its value substantially from the Indian asset, doesn't matter. The fact that the transferor of the shares of that Mauritius company, the fact that the transfer of the shares of that Mauritius company, they don't have the voting power in that Mauritius company of more than 5%, then they are the minority shareholder. And for the minority shareholder, students, there is no capital gains tax that is applicable. For the minority shareholder, there is no capital gains tax applicable in this concept of indirect transfer. I hope that all of you are clear with this one now, students. With this, students, we are done with one of the most expected area of your examination. Now, obviously, students, this is the ultimate speed that we could have done it. And still, students, it took 1.5 hours time. But believe me, after that, other particular section will not consume that much time, because of the kind of a length of discussion which is involved, and there are so many aspects that has to be discussed, that this much time at this speed, bullet speed, it still took that much time. But it was all worth it, because we have also covered the practicalities of this particular concept. So 911, by now, are you examination ready, students? 911, are you examination ready? The purpose of the bullet revision is all the concept that we learn, you will be examination ready. That is the very purpose of the bullet revision. Is that clear to all of you, students, now? So now, students, herein I will meet you on Monday at 7 o'clock. Link of which I'll just put it in my Telegram channel. So I will just put the link in the Telegram channel. In fact, already the link is generated. If you just scroll this particular Unacademy CA final, this thing, already the link is there. So you can just click to that like button or notify me, so that at least you will be aware that on Monday, this particular 7 p.m. we are meeting up for this particular further discussion on the non-resident taxation. I'll put this PDF file in the Telegram channel, and that is all of it, students. Fine. And now then, students, an announcement for all the other students who are there about students, our plus batch students. By the way, I should tell you that we are coming with subject wise. Please tell the students, for those who have got their attempt due in May 23, November 23, subject wise students will be launched. Subject wise, now you can take up subscription from the next week, students. That facility we are coming up now. So my direct tax family and the other faculty subject wise option would be available. So now we have already started the recording of the lectures. So it is a recorded mode primarily, wherein the subject wise lectures would be made available in a recorded mode, and thereafter, students, it will be put across. So you can, and my lectures in direct tax paper number 7 would be available both in Hindi as well as in English. So all the students who are having their attempt in May 23, November 23, please do tell them about this particular very important announcement which is going to be made in the next week or so, because the subscription for that subject wise, which they can do, it's a fully recorded lecture primarily, which we are already have done substantially. So that would be given to the students now. And for May 23, November 23, my lecture, one in Hindi, another in English, would be made available to all the students along with all the other faculty. Subject wise option would be available. That would be the game changer. Announcement will be made in a short while, students, in the upcoming week. And in the meantime, students, now the other feature of our plus, and in that subject wise, students, by the way, the textbooks and everything would be provided. That option of textbooks all would be available, and that too, students, at a very, very competitive price. That too at a very, very competitive price. So do let your friend know about this, students, primarily about this feature. So all that thing which many students were waiting for it is now a session on 6C which you're talking about it. Session on 6C, students. would be there. A revision session you are talking about it, na, Ashwini? Right now not placed, but if you all want, I will just could do it, Ashwini, only after 8th of this month, next month. Only after that I will be in a position to do that because of the constraint of the lectures and all. So only after 8th of October I will be in a position to do that. By the way, students, herein the group 2 subscription students which has been there presently in this context. Students, I'll just make an announcement quickly in this regard. So herein, students, as you all know, existingly we have the CA Final Plus subscription and the other particular part, students, which is in respect of the other particular part, students, which is in respect of the CA Final Plus subscription which has been there, and the second one, students, happens to be your iconic subscription, the benefit of which is known across, the benefit which has been there plus the entire group students gets covered, and there is a subscription of 2 months, 3 months, 6 months, 12 months, 24 months, 36 months. That is the feature which is available. And even iconic, students, starts from 2 months now. That is one of the important aspect, that even iconic starts from 2 months. This is one of the aspect. Iconic has got the textbook feature, students, which has been available in this context. So that is primarily one point which has been there. Second one important point, students, for all the students who are appearing for November 22, in the description box of this particular video, I'll just share you the link of the test series. 100 mark test series is due in the month of October. So those students who want to give the test in the month of October for 100 marks, those students can take this advantage. In the description box of this particular video, you will find, students, you will find primarily the link of the 100 marks particular subject test which is going to be conducted in the month of October. So do avail this particular benefit, and I'll see you then on Monday at 7 p.m. Let's crack it.